Welcome to this explainer. Look, today we're going to investigate a massive, quiet shifts happening literally right beneath the surface of our current economic boom. It's a story that genuinely feels like a cinematic thriller, but it's actually unfolding in our financial markets right now as we speak. Because, on the surface, the global economy looks absolutely unstoppable. Stock markets are hovering near record highs, major tech companies are pouring trillions, literally trillions, into artificial intelligence, and investors are acting as if a new golden age has already kicked off. By all accounts, it's a totally triumphant picture. But if we peel back the layers of this dazzling facade, economists, banks, and major financial institutions are quietly warning of a hidden structural danger. Behind closed doors, the narrative isn't just about this unprecedented innovation, it's about severe fragility. Which forces us to ask a pretty terrifying question. What if the entire market rally is being held together by a single bubble? And what happens to the rest of the world if this one pillar suddenly bursts? Because for the first time in modern history, AI is no longer just a technology story. It has become a global economic survival story. Chapter 1. The Facade and the Pivot. Let's dive right in. So a few years ago, AI was, let's be honest, mostly just hype. But then the spending became intensely real. Suddenly, AI wasn't just software on a screen anymore. It became real-world construction, massive humming data centers, incredible energy consumption, physical semiconductor manufacturing. Companies like Nvidia skyrocketed into unprecedented valuations almost overnight. And governments quietly realized, hey, we're entering a brand new technological arms race. And that brings us to this incredibly stark contrast happening right now. On one side, you have an exploding AI sector fueled by trillions in spending and record tech stocks. But on the other side, the underlying economic reality. Consumer debt is rising, manufacturing growth has actually slowed down, housing affordability is collapsing, and small businesses are seriously struggling with higher borrowing costs. Under normal conditions, markets would be panicking. But AI, it's completely changed the mood. Capital just flooded into AI infrastructure, and suddenly this one single sector began carrying the optimism of the entire market. AI basically became the modern version of a financial life support system. As long as it keeps delivering this explosive growth story, investors seem completely willing to ignore the deeper structural rot in the economy. Chapter 2. The Hidden Divergence and Astronomical Costs. Trillions. With a T, building this AI future requires a staggering, mind-bending scale of investment. Training these advanced models demands massive computing power, enormous facilities, and huge energy grids. And the kicker? Much of this expansion is being aggressively funded through debt by banks and private credit firms, all of them basically gambling on the assumption that AI demand will just infinitely grow. Every physical infrastructure need is directly tethered to a massive financial impact. Building those enormous data centers requires gigantic corporate financing. Securing the necessary energy requires aggressive debt funding just to keep the whole AI future afloat. Which leads us to a multi-trillion-dollar question. What actually happens if these companies build far more infrastructure than the world actually needs? Well, history gives us a very clear warning here. Back in the late 1990s, investors believed the internet would change everything. And you know what? They were absolutely right. But the early 2000s market still crashed anyway. Even revolutionary technologies can create devastating bubbles when expectations become completely detached from reality. The absolutely crucial takeaway is this. A technology can wildly succeed while its investors still lose massive amounts of money. Right now, astronomical sums are being spent before clear, long-term, sustainable business models even exist. Assumptions are driving the market. But, as we all know, assumptions are definitely not guarantees. Chapter 3. Looming Threats and Extreme Global Competition. Because the AI race is no longer limited to just a few tech companies out in Silicon Valley. This intense competition is happening on a global geopolitical scale. Entire nations are racing for dominance. China is investing aggressively, the US is fighting tooth and nail to maintain leadership, Europe is spending heavily on digital infrastructure, and Middle Eastern sovereign wealth funds are pouring billions into AI ecosystems. When you have that much money chasing one global opportunity, markets become dangerously irrational. And beyond the finances, there is a very grounded physical limitation we have to face. Can the world even support AI's long-term energy demands? Future systems are going to place an unprecedented strain on power grids worldwide. If our physical reality cannot keep up with our digital ambition, well, those massive growth projections might simply short circuit. Furthermore, AI's future depends entirely on incredibly fragile global stability. We're talking semiconductor supply chains, rare earth minerals, advanced chip exports. All of these are highly sensitive political flashpoints. And history shows us that global stability is never guaranteed, making this entire technological boom vulnerable to just a single geopolitical fracture. Chapter 4: The Chain Reaction. So what happens if the revenues don't justify the spending? Or what if a geopolitical shock hits? Think about how connected everything has become. It's a domino effect. First, companies begin cutting AI spending, construction projects slow down, and tech stocks start falling. Then, panic sets in, which immediately tightens credit markets. Layoffs begin spreading across the broader industry. And finally, consumer and economic confidence disappears faster than anyone expected. This is exactly how bubbles transform into full-blown crises. And the truly frightening reality is how concentrated this exposure actually is. A relatively tiny handful of AI-driven companies are responsible for a massive, massive portion of all stock market gains. If those specific companies stumble, entire market indexes are going to fall right alongside them. This creates a really dangerous illusion. People naturally assume rising markets mean a healthy economy. But we have to remember, markets and economies are not always the same thing. Right now, markets are blindly following AI liquidity and optimism, completely masking the very real struggles happening in the everyday economy. To be absolutely clear, this doesn't mean AI is fake or that the tech itself will fail. Not at all. But just like the dot-com crash, the transition could be brutal. Trillions of dollars could disappear. Thousands of companies could collapse. The strongest will eventually dominate, for sure, but the road there could be economically devastating. The real danger isn't the speed of AI innovation. The scary part is the dependency. Governments need it, markets need it, investors need it. If growth slows even slightly, the illusion of our current economic stability could literally disappear overnight. Thank you for joining me for this explainer. My advice? Keep questioning the narratives, because the illusion of our current economic stability rests entirely on a boom that feels triumphant. But always remember, bubbles don't look dangerous while they're growing. They look absolutely unstoppable, right up until the exact moment they burst.